So, Tony, an excellent update this morning with Asiamet's eagerly awaited upgraded JORC resource statement for BKZ. We look forward to you telling us all about it. After a modest 8.3 thousand meter drilling program, I think, you've declared a 50% increase in the contained zinc in the upper polymetallic zone and a 75% increase in the contained copper in the lower copper zone. So I think that's also following an incredible run of high-grade gold-silver drill results, where you've also demonstrated potential for yet another deposit within the BKZ polymetallic project, but for high-grade gold with silver this time. So yeah, let's get straight into it and outline the JORC, as there's quite a lot going on at this deposit.
Yeah, thanks, Sasha. So let's jump straight into it and have a look at what we've been able to achieve. As you said, very modest 8,300 meter drill program. And, you know, we've created, I think, you know, demonstrated a lot of additional value here at BKZ through that program. So as you alluded to, 50% increase in the overall zinc content in the upper zone. So we now, you know, have circa 90,000 tonnes of contained zinc in that upper zone, about 1 million tonnes, very high grade. And you know, investors who've followed the story over time will have heard me said this is extremely high value per tonne material. When you got grades at circa 8.6% zinc, 3.5 lead, with 3 ounces or 2 ounces of silver plus gold, you know, this material is very, very high value per tonne. In addition to that, you know, we've added 75% increase to the lower copper zone. So that lower copper zone continues to grow. It's good grade, about 1.6 million tonnes now of contained material, and you know, about 3/4 of an ounce of silver there as well. So big increases in both of those areas. I think importantly, they both remain open for further growth. And what we've done this time around is we've put some expiration targets. So there is a definition under the JORC code, which is expiration target, where you have existing drill holes, but you don't have enough drill holes and enough information to put together a resource, but you add hard facts in terms of that drill information to put some shapes around it and define a target for further growth. And we've done that for both the upper zinc zone and the lower copper zone. And, you know, we've got some pretty decent targets there to continue growing the resource. And we'll have a look at that in some sections in a minute, just to sort of see what that looks like. You just touched on, you know, I think a really important thing that's come out of this program, and that is the gold silver, the potential for the gold silver deposit that sits immediately adjacent to and as part of the same system, this same polymetallic system. And we've defined there, we've got about 15 holes in total, but the competent person felt that we didn't have sufficient data in terms of close enough spaced drill holes at this particular point in time to put a resource on it. So we've got an exploration target, which with a bit of additional drilling and met test work, we are very confident a significant part of that will convert into resource. And that target is circa up to 220,000 ounces of gold plus 20 million ounces of silver. So if you put those two things together, the value, in situ value, probably equates to somewhere in the order of 400 to 500,000 ounces of gold in total. So, you know, very significant value increases across all the different mineralization types, and we've added a new one in the gold rich zone. Just to put that in some perspective around numbers and in situ value, Sasha. So when we started this program, and you know, it was a small program, as we've said, probably the in situ value of BKZ was around $300 million if you add up all the metal content and apply the existing prices to those metal units that sit in the ground, about 300 million. Now, assuming we convert this gold and silver material into resource, we're probably talking about closer to $1.5 billion of in situ value in the ground. So huge growth in value for a very modest investment. We've obviously got further work to do to convert that material into resource, but I think it gives you some idea of the order of magnitude increase in terms of value that we've been able to add through this program, and it just shows you how much upside potential. We've always said there's a lot of upside potential still here. We've demonstrated that by these big increases in resources, big increases in situ value of metal, and it's going to continue to grow because it remains open in multiple directions. And as I've said, and I think I said it in the press release in my comments, our understanding of the geology is improving all the time. Our understanding of the controls on mineralisation and our ability to target it is continuing to improve. We've got a district scale opportunity here at BKZ, and it will continue to grow further and further. It creates a lot of optionality and a lot of future options for expanding and production at the BKZ complex once you have that infrastructure in place through the development of the BKM copper mine. So, we're really, pleased with what we've been able to achieve with this program, and I think there's plenty more to come, as you can see from those targets.
Yeah, Tony, you've always talked about the upside and the district scale potential and the other walk-up targets surrounding the BKM, which is the proposed copper mine, which is going into development now. What does this mean for that strategy, with satellite mines to the main mine? What are the next steps in getting this to production?
Yeah, so look, I mean, clearly our main focus has been on the BKM copper project, and I just talked about those in situ numbers there. That does not include BKM, which, contains circa 450, close to 450,000 tonnes of contained copper. So, so there's sort of huge value overall. But in terms of the strategy, we've done the feasibility study, which we're updating at the moment at BKM to get that into production. Good scale copper mine at 25,000 tonnes. What this does is it clearly demonstrates that there's a second leg to this project and a third leg to this project further down the track once you're up and into production, generating cash flow. This really represents a second stage, the first stage being the heap leach project. This would utilise some of that infrastructure, but you'd add a concentrate flow sheet to it and produce a concentrate for sale, which is this polymetallic metal-rich concentrate, and also the gold. Not sure how the gold will be processed until we get some metallurgical work done on it. But, clearly this would be a second stage, which would be, you get the heap leach up and running, you get the second stage, you put a concentrator in, you expand production, and essentially you continue to evolve the project through incremental expansions of capacity over time. So, once you've got that initial investment in place in the infrastructure, these things have, huge incremental value add, because you don't have to, you've got to put some incremental capital to work in terms of that new processing capacity, but a lot of the infrastructure investment's already been made.
Thanks, Tony. So I think you've got a couple more slides on the technicals with a couple of images to talk me through as well.
Yeah, have Sasha. So we'll just quickly punch through these, but I think diagrammatically we can show where the increases have been and what the ore body looks like, and where the potential or the expiration targets for further growth are. So look, the first one here on the left-hand side shows the existing resources now. So you see the polymetallic resource in the upper zone sits over the top of the lower copper silver resources, and then as we sort of move down the dip, you see that we have the gold exploration targets starting to show. The highlighted areas in green are the areas for further copper growth, and the areas in red there are the further zinc lead lenses that we just don't have enough definition around those at the moment with the drill spacing we have, and likewise for the gold. So that's a cross-sectional view, absolutely classical VMS geology, where you have stacked lenses with the polymetallic base metals sitting over the top of copper, with gold underneath and peripheral to that. So it's very classical VMS geology. and sitting in a volcanic stratigraphy, which is what we have here at BKZ and also at BKM. Now, if we look to the one on the right, that's a plan view. So you'll see a plan view over the strike extent, the upper polymetallic zone, and you can see those lenses shown in red on the left-hand side, shown here with the sort of reddish shading and open down dip in that direction. So that's the exploration target as it's defined, but it's still open further down dip. So, we'll need to continue to chase that down. It's very high grade material, and you'll be able to mine that, very easily as an underground proposition as it gets deeper. So, we need to continue to drill that and continue to add resources as we drill that down dip. So that's the first lot, Sasha. The next slide shows the copper zone. So likewise, the copper zone. So the copper zone sits underneath that UPZ mineral resource. So, and then it's open to the north there along strike, as we show there in the red color, or the purplish red color. And here on the right-hand side, we've got the gold exploration target. So you can see the copper zone, the upper polymetallic zone, and then to the east of it, you've got the gold zone. You can see the drill intersections there. So it's defined, even though it's an exploration target, it's defined by drill holes. And I think that's critically important for shareholders and investors to understand that it's, even though it's called an exploration target, that's the definition under JORC and the terminology that's used. But it just essentially, it is drill supported. It just doesn't have enough holes to give us the confidence to call it a mineral resource at this particular point in time. But with further holes, we're very confident a significant part of that will convert into resource. And that'll be the next part of the program.
Tony, just before you move on, the management team always seem to express a lot of excitement when VMS systems are discussed and your theories behind this system here. So can we go into a little bit about why that is, please?
Yeah, so VMS systems, or volcanogenic massive sulfide systems as they're known, are a deposit style which has been mined over long periods of time in many parts of the world. So it's a very well understood model. The thing that gets, really excites people about this particular style is that, as you can see, the grades are exceptional. So you get exceptional, grades, polymetallic nature of the deposits, and exceptional grades. So what that does, clearly, it enables you to produce multiple products. It enables you to irrespective of where you are in the cycle, you can be a gold dominant miner at any particular point, a copper dominant miner, or a zinc miner, or all three at any given time. So it's the product mix, the flexibility, the high grade, and the very high margins that you get because of the high value per ton of this material. Now, the second part about VMSs is they typically occur in clusters. So even though these are not huge tonnage deposits, they typically occur in districts and clusters. And you can go to some of the world famous examples. One that I've worked very extensively on in Australia called Golden Grove, probably started out very similar to what we are today at BKM BKZ, has been operating continuously for 30 years and still has 14 years in front of it, and it will go for 50 years. So, and that's multiple lenses and multiple deposits. So at Golden Grove, there's essentially, at the moment, two main mining fronts mining multiple different lenses. And then we have another couple of areas where there's new mining fronts to be developed with multiple lenses as well. In Tasmania, in Australia, likewise, down in Halyakeu River, mined over a long period of time, made a lot of money for for companies and shareholders. And then over in Canada, we've got the famous Key Creek deposit and many large ones there as well. So, you know, they're characterized by high value, high margin, polymetallic nature, and they grow over time. They're the type of deposit style with further exploration, better knowledge of the district. These deposits tend to grow from small things to large things with very long life, and hence the reason that they're prized assets for explorers and for mining companies to develop.
Thank you, Tony. Okay, so moving on, you prepared a few other slides. I think one on Indonesia and the role it's going to play in the battery metals and commodities sector. It's obviously been featuring quite a lot in press recently too.
Yeah, look, I mean, I think a couple of slides just around that thematic, Sasha. So the first one here, what I just want to demonstrate, because we've spent, I guess, the majority of our time focused on copper. Obviously, with the polymetallic nature of our ore there, we have quite a lot of zinc. And I just wanted to sort of give you some perspective around copper and zinc in the whole energy transition thematic. So what we've got on the left-hand side is essentially all the technologies related to energy transition. So solar, wind, EVs, the network, batteries, etc. And you can see which of the commodities are used across those different segments of the energy transition. Copper, obviously, is a dominant feature. It's in every one of those technologies, irrespective of which it is, including obviously the network to distribute the electricity. And then you see down the bottom zinc, which we've got quite a significant amount of zinc at BKZ in addition to the copper. And you can see zinc is an important metal in the energy transition as well. It's not typically thought of as an energy transition metal, but it is a very important part of the energy transition, particularly in wind and offshore wind, because the metal structures that are the turbines that generate the power from offshore wind are obviously sitting in the sea. So galvanizing is an incredibly important part of the preservation of the steel long term and the infrastructure that sort of sits behind those wind farms. It's also, for the same reasons, important in solar in terms of its capacity to galvanize metal, the metal infrastructure that supports solar. And likewise across the networks, as it plays a part in the battery technology as well. So zinc's an important part of the whole energy transition mix, probably not as critical as copper, but certainly an important component of it. So, gives you some perspective around, I guess, BKZ, BKM and that whole district where we've got the polymetallic nature of our deposits, and that's the opportunity for us longer term. This is an energy transition story, particularly when you couple it up with Indonesia. Look, I won't talk much to the slides on the right hand side, other than to say, we believe we're in for a sustained period of strong prices because of that thematic. And because there's been no new discoveries made and very little new development, we see metals prices being under price tension for quite a long time to come. Demand is very high and production is struggling to keep up, and it will continue to be that way because there's a whole range of factors which impact upon your ability to ramp up. Particular permitting and environmental constraints continue to push the timelines for development out further. So we're in the right metals, and if we look at Indonesia, so Indonesia is positioning itself really as an energy transition powerhouse in Asia. I mean, if you look at the country, it's very heavily endowed with all the metals that make up the energy transition. It's the world's biggest supplier of nickel. It's a large, it'll be in the top 10 copper producers globally. And then, we've got other metals, coming through now, zinc, as I mentioned, and things like lithium. There's a few headline banners here just to demonstrate, what we're seeing there. The government's got a very strong push to position itself as a powerhouse in this segment in the Asian region. Tesla, is obviously the headline there. Tesla's, is looking to build a battery and EV factory in Indonesia, and likewise CATL, the massive Chinese, probably the Chinese version of Tesla, is investing $6 billion in battery. It's the biggest battery manufacturer in the world, CATL, and they're investing $6 billion in a facility in Indonesia. Freeport's building a new smelter, expanding its capacity in copper. And then there's, other Chinese companies pairing up in lithium and in other segments. So a lot happening in that EV, battery metals, energy transition space in Indonesia. And, with our project in central Kalimantan there, with the metal mix that we have, we're right in the thick of things in respect of that thematic. So, it's an exciting time for us. This is being recognised by, a whole range of different players that Asiamet has the raw materials that can supply into this battery metals chain. So.
A lot of press recently with and focus on Indonesia with Elon Musk's recent visit and his meetings with Jokowi, the Prime Minister.
Yeah, no, absolutely, and that's where Tesla agreeing to build that factory. So, as I said, Indonesia's is the largest nickel producer in the world globally now. So, and it's a massive 250 million people, very rapidly growing middle class. It's ideally positioned as an archipelago with deep water ports to supply into Asia. So it makes a lot of sense for Tesla and to be positioning in that country. So exciting times. And the big Indonesian houses are also positioning themselves, for this thematic as well.
Yeah. So obviously, how are Asiamet's relationships with the government of Indonesia, and probably more importantly, how's the permitting going?
So, our relationships are well established. As I've said, multiple times in the past, we've been operating in Indonesia for 30 years. That builds credibility and it builds, access. So, Asiamet is well thought of in the country. I can assure you that, in fact, almost every conference that's held, we're invited to speak, and an important part of, the fabric of the Indonesian mining industry. So recognised for that, recognised as a long-term sort of investor in the country, and, we've built up the credibility because of that. So, and look, Indonesia itself is evolving into, a jurisdiction which is very much investor friendly, and hence the reason you're seeing all these companies coming to invest there. Large scale investment, billions and billions of dollars in investment. It's open for foreign investment. It's investor friendly. It's encouraging further investment into the metals, mining and metals space, built around this thematic. It's a natural strength of the country. So, good place to operate. We're well positioned, and on the permitting side, look, the permitting's progressed pretty much according to plan, Sasha. As our project is evolving in terms of where we are in our development phase, the permitting has continued to deliver to that timetable. So, no issues with the permitting. We just, as we sort of progress milestones, the permitting milestones will come at the same time. There's no point in getting well ahead of ourselves in terms of the permitting. It's logical that the same milestones that we achieve in terms of the technical aspects and development aspects of the project are tied together with the permitting, which is exactly the way that it's running.
This is our final slide on the a bit more background and detail on the process which you've been running so far, Tony, and where it's going now.
Yeah, thanks, Asher. So thought it's important to just provide an update for shareholders and investors on the diligence process that's been undertaken by DOID. We know it's taken a considerable amount of time and people are getting frustrated by the time it's taken, but I just want to give some context around that. Obviously, we're looking to advance this as quickly as we possibly can, and that's what we've been doing. So just running through, I mean, the initial diligence was undertaken on the project by DOID. They had an independent consultant to do that work. That work was done. DOID, as we've outlined, is not it's currently not a metals mining company. They are a coal, essentially a coal dominant contracting company. So they were looking for a bit more certainty around the financeability of the project as part of their diligence. So we agreed that probably the best way to achieve that was to fast track the financing process and look to appoint, firstly, engage with the bank, a lead bank on the debt financing side, and then in turn appoint an independent technical expert to review the project for essentially the ability to finance and bank that project as part of the bank's requirements. So we agreed on we spoke to a number of banks. We agreed on a lead bank to take it forward and advise on the debt finance requirements for that bank. We then ran a process to appoint an ITE, which was considered to be satisfactory to the bank, and as well as our DOID and ourselves. That ITE was appointed. And then they got to work on really reviewing the 2019 feasibility study. The first piece of that was really looking at a red flags review. So the red flags is really just to look at the key areas and determine whether there was any showstoppers in there at all. So high level look. The second piece was really to, okay, from that work, were there gaps between the study as to where it was in 2019 and what the bank's requirements were, and then use that information to feed into the definitive feasibility study, which has been undertaken by Newpro, to ensure that once we completed that study, there were no gaps in terms of the bank's requirements. So typically this particular type of ITE review work is done after the feasibility study is completed as part of the financing process. We brought that forward, so it's very much de-risking the financing process by having the bank engaged now, having the ITE engaged, and then feeding that into the definitive feasibility study, such that when it's completed, it should more than satisfy the requirements of the bank in terms of financing. So, we brought a lot of that forward by this work. Yes, it's taken quite a period of time, but it's been a very rigorous process, and it de-risks the project financing a long way through that process. So, as you can see from the slide, it's covered all the key work streams. We've been all that work's been done. They had individual consultants working in each of these key areas and have pulled it together into a draft report, which is being circulated for comment. Those comments have gone in, and we expect the final report next week. So we'll take that ourselves together with DOID, present the project execution plans to the bank, and for the bank to assess the bankability of the project execution plan that we've got in place, and that will complete the process that we set out in terms of the the diligence and to test the bankability and financeability of the project based around the work that we've done to date and the work that NewPro is doing to update that. So, as I said, rigorous process, but it puts us in very strong standing to take the project directly into financing as soon as the definitive feasibility is completed.
Okay, Tony, thanks very much, and look forward to hearing more on the process in the near future.
Yeah, thanks, Sasha, appreciate the opportunity to run through this with shareholders today. It's an important milestone, another important milestone for the company marked off, and many more to come going forward. Look forward to reporting on those as those particular work streams and milestones are met. Thanks to all investors for their patience. We know it's taken a considerable amount of time, but as I've alluded to today, we've actually brought forward quite a bit of work that typically is done a bit further down the track, and as part of while undertaking that, we've sort of de-risked the project we're de-risking the project from a financing perspective. So thanks for your patience. It will be well rewarded in due course. Thank you.